How to start a bank, step-by-step guide. Have you ever wondered what it takes to start a bank? In today's video, I'm going to show you the real steps, from choosing the right jurisdiction to managing profits through fractional reserve banking. Stick around until the end to get the full picture. Introduction. The establishment of a bank is a complex and highly regulated process, yet it is one that can be extremely lucrative. The banking industry, with its steady flow of deposits and interest earnings, remains one of the most profitable sectors globally. In this educational report, you will learn the key steps necessary to start a legitimate, functioning bank, based on real-world experience. We will also differentiate between the legal procedures for starting a bank and the misconceptions surrounding the concept of infinite banking, especially as promoted by cash value life insurance products. Footnote. This section sets the stage for the discussion, emphasizing the importance of real-world experience and clarity in understanding the true process of starting a bank. Step 1. Choosing your jurisdiction. Before establishing a bank, you must select a jurisdiction in which to operate. In the United States, the capital requirements to start a bank range from $15 million to $30 million. This capital acts as a cushion to absorb potential losses and maintain operations during times of financial instability. However, in certain foreign jurisdictions, such as Dominica and St. Vincent, the initial capitalization can be as low as $500,000 to $1 million, which can be raised through investors. The jurisdiction you choose will impact the regulations you must comply with and the licensing requirements for your bank. Footnote. The jurisdiction chosen for bank formation plays a critical role in determining regulatory compliance and capital requirements. Step 2. Forming a corporation. The next critical step in starting a bank is to establish a corporation in your chosen jurisdiction. Initially, this corporation should not include the word bank in its name. Once the necessary banking license is secured, the corporation can amend its name to reflect its banking status. Establishing the corporation requires legal assistance to ensure that the structure adheres to regulatory requirements. Additionally, a physical address in the chosen jurisdiction is needed to comply with initial regulatory filings. This step lays the foundation for the bank's operations and establishes the legal entity under which the bank will operate. Footnote. This step emphasizes the necessity of forming a corporation before obtaining a banking license and the role of legal counsel in this process. Step 3. Banking application and due diligence. To operate a bank, you must submit a detailed banking application to the relevant regulatory authority. This process involves comprehensive due diligence, where your background, financial stability, and legal compliance are thoroughly reviewed. Regulators will run background checks on all individuals involved in the bank's operations, and it is highly recommended that you include individuals with banking experience on your board of directors. The application will also include detailed financial projections and operational plans, which will help the regulators assess the viability of the bank. The application process can be costly, often exceeding $100,000 in legal and licensing fees, but this can be covered by the investors who are funding the bank's formation. Footnote. This section outlines the importance of due diligence in the banking application process and the need for board members with banking experience. Step 4. Proof of capital and investor fundraising. In some cases, you may need to provide proof of liquid capital to ensure that the bank has enough financial backing to operate. If you lack the required funds, you will need to raise capital from investors. It is critical to demonstrate that you have access to the necessary funds to meet regulatory requirements and maintain operations during the early stages of the bank's formation. Investors will typically contribute the necessary capital in exchange for equity in the bank or a share of its future profits. This stage is essential in ensuring that your bank is sufficiently capitalized to meet both regulatory and operational needs. Footnote. This section addresses the importance of capital proof and investor involvement in ensuring the bank's financial stability. Step 5. Securing a location and hiring personnel. Once your corporation is set up and the banking license is secured, the next step is to find a physical location for your bank. You will also need to hire local personnel to manage operations, comply with regulatory requirements, and ensure smooth business functioning. The location and staffing will depend on the regulatory framework of the jurisdiction, and it is typically required to have at least 2 employees to comply with local regulations. Attorneys familiar with the banking industry can assist you in securing a location and hiring the appropriate personnel. Footnote: this section explains the need to establish a physical bank location and hire staff to ensure regulatory compliance and smooth operations. Fractional reserve banking and profit generation. Once operational, your bank can profit from lending out deposited funds through fractional reserve banking. With fractional reserve banking, banks are allowed to lend out a portion of the deposited funds, generating significant profits from interest on loans. For example, if your bank holds $10 million in deposits, it can lend out up to $100 million, amplifying profits from interest. This system allows banks to generate substantial income from lending, such as through construction loans with higher interest rates. This profit is further bolstered by fees on deposit accounts and loan origination charges. However, it is essential to maintain a conservative approach and only engage in safe, low-risk investments to avoid potential losses. Footnote: this section highlights the profit potential of fractional reserve banking and emphasizes the importance of risk management. The realities of banking, a cautionary tale. While the banking business can be highly profitable, it is not without risk. In the early 2000s, a bank was established with an aggressive loan portfolio, including real estate development loans. However, the global financial crisis of 2008 caused significant market instability, leading to widespread foreclosure and the failure of many banks. Despite the initial success, the bank ultimately failed due to the collapse of the real estate market. This underscores the importance of understanding market conditions, maintaining conservative lending practices, and preparing for financial downturns. Footnote: this section provides a cautionary tale about the risks involved in banking, particularly in volatile market conditions. Now that you know how to start a bank, it's time to take action. Whether you're raising capital, securing a banking license, or finding your first location, the journey is just beginning. Subscribe for more insights, and we'll see you in the next video.